inexperienced staff, what will happen? Those inexperienced staff will create misstatements in several accounts. When they compute depreciation, they may make mistake. When they capitalize the PP, they may capitalize revenue nature items because of inexperience. Okay. When they recognize the revenue, correct revenue recognition point, sometimes they can't trace the correct revenue recognition point. Okay, then revenue recognition will be wrong, incorrect. When they value the gratuity provision, they may make mistakes. Okay, capital next expenditures they may categorize under revenue nature expenditures they may categorize under capital nature. When they perform bank reconciliation, they may not perform in a proper manner because of inexperience. So, because of inexperienced staff, lot of misstatements can be happen in the financial statements. So that is overall financial statement level risk. Okay, certain risk we will be considering as a overall financial statement level risk. Why we are considering like that? Those risks not only affect one or two accounts in the financial statements, those risks will affect to lot of accounts in the financial statements. Correct example is we have lot of examples, but for your understanding, easy example I can say that is inexperience accounting staff are available in the finance division. Clear? If the account will, if the account, if the risk affects to lot of accounts in the finance statement or lot of assertion. Okay, for the time being, just assume lot of accounts. Assertions I will come to later. So for the time being, just understand if the risk affects to lot of accounts in the finance statements or many assertions. So what is mean by assertions? For the time being, just keep this definition in your mind. I will explain what is mean by assertion later. So you should understand if a risk affects to many accounts or many assertions, that risk called overall financial statement level risk. Simple example, inexperienced staff in finance division. On the other hand, assertion level risk. Assertion level risk means now what what's what we are doing now, we have identified the risk. Okay, we have identified the significant risk. Okay, high risk we have identified. Okay, now those significant risks we are assessing, now this significant risk we are classifying into two buckets. One is overall financial statement level risk. Second one is assertion level risk. Overall financial statement level risk I have explained you now. And assertion level risk means if a risk affects only to specific account, or specific assertion of that account, that is called assertion level risk. Okay. Okay. So if a risk affects to particular account or particular assertion, okay, that risk will not affect to lot of accounts in the financial statements, only to that particular account or particular assertion. That risk called assertion level risk. Simple example, as I explained earlier, if complex computation, if you face in finished good valuation, that complex transaction will affect only to the finished good valuation, not to revenue, not to expenses recognition, not to PP capitalization, not to PP depreciation. It will affect only to inventory valuation. But when it comes to inexperienced staff, it will affect to lot of accounts, as I explained earlier. So if a risk affects to only one account or one or two accounts or limited assertions or one or two assertions, then we can say that risk called assertion level risk. Okay, so here Overall financial statement level risk. I have explained what are the overall financial level risk. Risk that relate pervasively to financial statement as a whole and potentially affect many assertions. Okay, lot of accounts will get affect because of these issues. Point concern, override controls, as I explained earlier. If internal controls weaknesses you find, internal control weakness in sales, that will affect only the sales. Internal control weaknesses in purchase, that will affect only the purchase. But internal control weaknesses in several processes will affect to lot of accounts. Clear? Earning targets, internal control weaknesses in several accounts, inexperienced staff, significant manual process. So these are the overall financial statement level risks. If you notice these risks will create a lot of mistakes in relation to lot of accounts, several accounts. Clear? Okay. Then how you know internal control weaknesses? If internal control weaknesses in several accounts will cause material misstatements in several accounts. Inexperienced staff, inexperienced staff will may create lot of issues in the account. So how this target pressure will create overall financial statement level is target pressure, pressure to meet earning targets. What is mean by pressure to meet earning targets? Pressure to meet earning targets or incentives paid based on the targets, based on the targets achievement. What will happen? Incentives pays. So now CFO of the company, group or chief financial officer of the company will get his incentive or bonus. Let's take this example. CFO of the company will get bonus or incentive based on final profit earned by company. Okay, based on final profit earned by company. Then what he will do? Always he will try to make high, make to keep high profit. He will try to keep high profit. Then only he will get then only he will get uh, higher incentive, no, higher bonus or higher incentive. We will get only if we keep high profit in the financial statements. Then what he can do? Then what he can do? He can purposefully he can reduce the expenses. Purposefully he can increase the revenue. Okay. So if he maintains high margin in his financial statement, then he will receive high bonus or high incentive. For that, he can touch revenue, bogus revenue entries he may pass, or expenses he can reduce. Capital nature, revenue nature expenditures he can charge to capital, he can classify under capital nature. Then what will happen? Revenue, profit automatically will go up. If you charge, revenue nature expenditures under capital nature instead of expenses, if you recognize as a asset those expenses, what will happen? Expense will come down. Okay, expense will come down. After that, what's the next step? Your profit will go up. So then he can get high incentive. On the other hand, last month, last month, he can put lot of bogus revenue entries. By putting low bogus revenue entries, he can increase the revenue amount. If he increases the revenue amount, then he will get more incentive. Okay, so these are the things called overall financial statement level risk and assessment level risk. Okay, now I will come to later these analytical procedures. What is meant by analytical procedures? I will come to later. Now we have completed this area. Now we have completed risk assessment. Now we have completed risk assessment. Okay. Under risk assessment, what are the things we have discussed? What is mean by risk? What is mean by significant risk? What is mean by risk? What is mean by risk assessment? What are the risk, inherent control reduction risk? After identifying the inherent control reduction risk, from there we should filter significant risk. What is mean by significant risk? Significant risk means risk which will cause material misstatement in the financial statement. So those significant risks, again, we have to assess and we have to classify into overall financial statement level risk and assessment level risk. Now, third main topic, risk responses. Based on the assessment of risk, what is the result we have received? Overall financial statement level risk and assessment level risk. Okay. There are two types of risk responses. Clearly listen and understand. Here we are not going to perform audit procedures. Okay. So what is the planning objective? What's the planning objective? We have to decide what are the audit procedures we are going to perform. Okay. What are the audit procedures we are going to perform? That is the final objective of this planning. So that only, to achieve that only, we are doing these activities. So now we have come to our final destination in the planning. We have assessed the risk. Now, based on the risk, now time to decide our audit procedures. Decide, not performing. Okay. At planning stage, we are deciding. At planning stage, we are deciding what are the audit procedures we are going to perform. After making that decision, step three, audit procedure. Step three, audit procedures we are going to perform. But we have decided at risk response level, which means under audit planning, that execution part we will do at step three, which is audit procedures. Now we have assessed the risk. Now time to decide what are the audit procedures we are going to perform. What are the audit procedures we are going to perform? Clear? So based on the risk assessment, we got significant risk. After that, assessing the risk, we got overall financial statement level risk. What are the overall financial statement level risk? Inexperienced staff and internal control weaknesses. If you notice those things, those are the overall financial statement level risk. Now, second category, assessment level risk. So, based on those result, based on the result, based on those nature, overall financial statement and assessment level, our risk response also related to overall financial statement level risk response and assessment level risk response. Simple, you can understand easily. We have we have we have two outputs based on the risk assessment: overall financial statement level risk and assessment level risk. So to to respond overall financial statement level risk, we should form certain risk responses. Those risk responses called overall responses to address to mitigate assessment level risk. We will decide assessment level risk responses. Okay, these two overall assessment level. Clear? Overall responses and assessment level responses. I will take first overall responses. Okay, I will take overall responses. Here, most important part, see here, formulate an approach, deciding the audit procedures, not performing. Okay, මේක පොතේ කොතනරි ලියලා understand කරගෙන අර step එක තියෙනවානේ. අර මම දුන්නනේ step 4ක්. So just note somewhere in your, okay, not somewhere, that 4 buckets I have given now. Audit planning, assignment, agreeing the terms, audit planning, performance procedures, audit procedures, and reporting. 4 topics I have given, main topic. So under that, in audit planning, highlight it. They are deciding audit process, not performing. Performance in third step. Okay. Okay. So now you have found certain overall risk. What are the overall risk? Inexperienced staff, manual journal entries they are putting, and going concern issues and internal control. Lot of internal control because find several processes. Lot of overall risk items you have noticed. Okay, certain risks are there. Those risks will affect to overall finance statement level. So to mitigate those type of to identify the material misstatements because of those overall financial statements level risk, we will decide certain overall financial statement overall responses. In short term, we can say overall responses. What are those overall responses? Emphasizing to audit staff to maintain professional skepticism. Okay, just first we will read and after that we will come to the explanation. Emphasizing to audit staff the need to maintain professional skepticism. Assigning additional or more experienced staff, providing more supervision, incorporating more unpredictability into the audit procedures, making gentle changes in the nature, timing, and extent audit procedures. What are those? So these overall responses will cover overall financial statement level. These things will not cover only for specific items, inventory or PP or revenue or expenses. These responses will cover entire financial statement level. So if, for example, I will connect this theory to one example. Let's say one of the overall financial statement level risk is inexperienced staff. Because of that, they may create lot of material misstatement in the financial statements. Okay. To identify those misstatements, okay, to identify those misstatements, if we send low level, which means inexperienced audit staff, whether they will be able to identify those misstatements, they can't. If we send 5 juniors, they have only 3 months, 4 months experience. Okay, if we send only 5 juniors, whether they will be able to identify those mistakes? No, because they don't have enough experience. So here, if we feel, yes, this company does not have proper finance staff, they may make some material misstatement. If you feel like that, then to identify those misstatements, those material misstatements, you should send experienced staff. You should send experienced staff. If you send experienced staff, then they will be able to identify the material misstatement. Then you can mitigate the risk. Clear? On the other hand, we should tell our auditors, our staff, always think we should tell, yes, according to our past experience, according to our initial risk assessment, this company has lot of significant risk. It's the conclusion we came. Okay, lot of significant risks are there. Yeah, lot of risks are there. So when we are performing the audit, always we should think there's a risk, there's a material misstatement. Okay, always we should think. That's how we are explaining to our audit staff. That means professional skepticism. We have to tell them, yes, according to our risk assessment procedure, we concluded this company has lot of risks. Those risks, a lot of significant risks. Those risks may cause material mistakes. It's the statement we have to give to audit team. Then, additionally, we should tell them, yes, because of this risk, in order to mitigate our risk also, always you should be in a questionable mind. You should have a questionable mind. Always, if you notice any unusual things, unusual variances, if you feel this is not related to this company and operation, then always you should have professional skepticism, which means questionable mind. Always ask questions and get proper clarity. So that we have to tell them. And most experienced staff we have to assign. Regular supervision should be done. දැන් පොඩිට එකට පාර්ට්නර් උත් මැනේජර් රිස්ක් තියෙන කම්පැනි එකට සෙන්ඩ් කරාට පස්සේ පොඩි ෆයිල් එක ආවට පස්සේ තමයි මේක ෆයිනලයිස් කරන්න ඕන එක හිතාගෙන ඉන්න බෑ. මැනේජර් එඩිට් වෙන්න යන්න ඕනේ, ගිහලා රිවිව් කරන්න ඕනේ. It should be happen. So it's not like beginning of the day or beginning of the audit, partner and manager will involve and they will tell these are the risk areas you should do and bring the file after 3 weeks. Not like that. We should not tell like that. You feel this is the high risk company, lot of risks are there, and those risks will create material misstatements, if you feel like that, then you have to do regular supervision. Okay, planning meeting you have to attend. After 1 week, we have to get the working papers and we have to review. Time to on time we should take the correct decisions. If we come across any difficulties or any issues in the audit and finance statements, then at the same on time we have to take and without waiting last moment, we have to take proper decision on time. Then it will save time. Okay, it will save both parties time. Incorporating more unpredictability into the audit procedure. Normally, in auditors, they will take systematic sample and high value samples. Then accountants also they know no, if auditor comes, he will check these things only. Then he may do fraudulent activities in other accounts because he knows last 3 years auditors came and they have checked only high values items and systematic sample based on the systematic sample. So then he can get the idea, okay, if auditors come, they will check these things based on this high value and based on this systematic sample. They won't bother about other things because last 3 years I know what they did. Okay. If he knows these things, then what will happen? He will do certain mistakes or fraudulent activities in other areas, okay, which were not checked by auditors last year. Now, as an auditor, we should check those areas also. Even though we are checking systematic, we are checking certain samples based on the systematic and high value basis. Still, we have to verify other items also. We have to pick other items and we have to verify. Then we can identify the small amounts. Small amounts we can verify. Small amounts we have to take 5 or 6 transactions and we have to verify. Unusual transactions. If you notice unusual variances, unusual transactions, if you notice this account is not related to the business operation of the company, then you should ask questions. So likewise, so unpredictability, not only systematic and high values, other values also you should check. Okay. Now accession level risk. Okay. Now accession level risk. Accession level risk, we have two risk, responses. Accession level risk, we have two responses. There are test of control. Test of control. Second, this is test of control. And second one is substantive audit procedure. Accession level responses, we have two responses, test of control and substantive audit procedures. Substantive audit procedures, we have two, test of details and substantive analytical review procedure. Okay, one by one we will discuss. Okay, accession level risk. Accession level risk means accession level risk response. What is meant by accession level risk? Risk which will affect only to the specific account or specific accessions. Accession. Those risks called accession level risk. So first accession level risk response is test of control. Test of control. Initially, I told control risk. No, what is meant by control risk? Whether controls are operated effectively or not. Whether controls will detect, prevent, and correct the material misstatement in the organization financial statement. Okay, that's called control risk. So, how we can determine this control risk? If internal controls are properly there in the organization, we can say control risk is low. If internal controls are not properly maintained in the organization, control risk is high. Okay, so how we can justify controls are properly maintained or not maintained? For that purpose, auditors will do test of control. What is meant by test of controls? They are going to check, verify the controls. Which controls? Financial controls. They are not going to bother about other controls. They will focus only financial control. Okay, financial control. Those financial controls auditors should verify. Okay, whether controls are properly by taking 25, 30 samples, auditor should verify whether those controls are effectively operated or not. That is called test of control. Clear? Understood? Whether controls, financial controls implemented in the organization properly operated or not, effectively operated or not. That conclusion we have to take by doing test of control. Okay, so controls verification. Test of controls are audit procedures designed to evaluate operating effectiveness of controls, preventing, detecting, and correcting. One second. Operating effectiveness of test of controls should be evaluated by auditor. Okay, clear? So that is called test of controls. Okay, testing the control. The heading itself explaining the meaning, test of control. So there is a method to perform these test of control procedures. Those things we will learn in your second stage, second level, second semester. But here you should understand there is a assessment level substantive audit procedures that is called one of the sorry, there is a assessment level audit procedure responses. One is test of control, another one is substantive audit procedures. So test of control means auditor should check financial controls, whether those financial controls are effectively operated or not. Okay. When auditors risk assessment includes expectation that controls are operating effectively, the auditor shall design and perform test of controls to obtain sufficient appropriate audit evidence that the controls are operating. So first, this definition you understood now. Test of controls, evaluate the operating effectiveness of control. Okay. I will explain together this third and fourth, sorry, second and third paragraph. When the auditor's risk assessment includes an expectation that controls are operating effectively. Okay. The auditor shall design the perform test of controls to obtain sufficient appropriate audit evidence that controls were operating. The auditor shall also undertake test of controls when it will not be possible to obtain appropriate audit evidence or appropriate audit evidence simply from substantive audit procedure. Okay, second and third, I will explain. Sufficient and appropriate things we will discuss in our second tute, sorry, third tute, next tute, part E. For the time being, just forget about the sufficient and appropriate audit evidences. Just keep in your mind audit evidences. Okay. Test of control. What is mean by test of control? As an auditor, we should evaluate whether company's financial controls are effectively operated or not. Okay, that is test of control. Okay. Why we should do test of control? හරි දැන් මෙතන තියෙනවානේ. Now we know assessment level responses. Under assessment level responses, we have two types of responses, TOC and substantive audit procedures. So TOC means test of control. Substantive audit procedures we will discuss later. So why we should do this TOC? දැන් මමත් කියනවා ඔයගොල්ලන් අහගෙන ඉන්නවානේ. Why we should do this test of controls and substantive process? What is mean by substantive process? What is mean by test of control? Why, as an auditor, we should check controls directly? We can verify them. We can verify this. Verify කරන්න පුළුවන් this with invoices and payment vouchers, those things. Just understand. If you take a large organization, okay, like John Fields, Haley's, Hema, and what else? Richard Perry's. If you take a large organization, can you check all the transaction in detail? Is it possible? Because we are going to verify only sample, but in sample also, whether is it possible to check all the transaction in detail? It will be difficult. It will be difficult. Okay, but it's like this. If we need to check, then we have to check. I will come to later that point. So first of all, we have to check the controls of the organization. What are the controls only? Who needs control first? Whether auditors or management? Management, because their operation. First of all, to get good benefit from their operation and business activities, first of all, they should implement the internal control in their business. Okay? Auditors ලාට ඕනේ නැහැ මේ organization වලට ඒගොල්ලන්ගේ internal control එක හරියට implement කරන්න. අපේ business නෙමෙයි මේක. First of all, relevant company should implement because they need to implement. They should have that necessity to implement internal control, because by implementing internal control, they can get a lot of benefits. What are the benefits? Fraud can be mitigated, mistakes can be mitigated. Oh, what else? Important. They can enhance the decision making, compliance related. In internal control, we have studied no importance of internal control. By implementing the internal control, what are the achievements they can get? What is the importance of internal control? Fraud can be mitigated, mistakes can be mitigated. Through that, enhance the reliability of the financial reporting. They can ensure the compliances. They can enhance effectiveness and efficiency of the business operation and enhance decision making. If finance statement users, if they get proper financial statements, then based on that they can take some good decisions. If financial statements indicates wrong figures, based on that, if they take any decisions, that may go wrong. Not may, that will go wrong. Okay. So first of all, organization should have the thinking to implement the internal control, because internal control direct benefit will be taken by the organization. So definitely big organization, they have internal controls. So if as an auditor, if we check the internal control, verify the internal control, and if we get comfort about company's internal control, stating that these companies' internal controls are operated efficiently and effectively, if we get that comfort, then we can rely on test of control. We can rely on company's control. If we rely the controls of the company, then we don't need to do detailed substantive procedures. Okay, make a ලියාගන්න note එකකින් හරිද? ඔයාලගේ notebook එකකින් ලියාගන්න මේක important. First point මේක ලියාගන්න. First point, auditors will evaluate the operating effectiveness of internal control. Auditors, not internal auditors, auditors means here external auditor. In bracket, you can write external auditor. Auditors will op- evaluate the operating effectiveness of internal control. In bracket, write financial internal control. Okay, internal control. Second topic, second point, right? If internal controls, if internal controls are uh, if internal controls are operated effectively, if internal controls are operated effectively, if internal controls are operated effectively, then auditors can rely on control. Then auditors can rely on controls. Then auditors can rely on controls. Okay, auditors can rely on control. If they, third point, if they rely on controls, if they rely on controls, if they rely on controls, auditors can perform combined audit procedures. If they rely on controls, auditors can perform combined combined audit procedures. Okay. If they rely on control, if auditors rely on controls, they can perform combined audit procedures. Next point. What is mean by combined audit procedure? What is mean by combined audit procedure? What is mean by combined audit procedures? What is mean by combined audit procedure? Combined audit procedures means test of controls මේ ලියා ගන්න පල්ලෙයා combined audit procedures එකෙන් arrow mark එකක් දාලා ලියා ගන්න test of control plus test of control plus ඒ කියන්නේ test of control එකත් එක්ක test of controls plus limited substantive audit procedures. Limited substantive audit procedures. Test of control plus limited substantive audit procedures. Okay. What is mean by limited substantive audit procedures? This is for your understanding. Okay, this is for your understanding. It will help you to learn your second stage this topic. Okay, when you learn this topic in your second stage, this discussion what I have given, it will be helpful to you. Okay, for here I'm not going to ask any questions about this combine those things. Okay, for your understanding purpose only I have given these notes. Okay, this will be helpful you to second stage. Okay, what is combine? Certain things I want to tell here. You don't need to write these things, but if you want, just put a notes, short notes. There are two types of audit procedures. No, one is test of control. Another one is two types of audit procedure. One is test of control. Another one is substantive audit procedure. Okay, there are two types of audit procedures. So, test of control. What is mean by test of control? We have to evaluate the operating effectiveness of internal control. Simple thing. Substantive audit procedures. We have test of details and we have analytical review procedure. Okay, there are two types of substantive audit procedure. First one is test of details. What is mean by test of details? Detail verification should be done. Okay. Second category is substantive analytical review procedures. Okay, there are two types of substantive procedure. Substantive test of details, and substantive analytical review procedures. Just keep in your mind these examples and definition. That is enough in your level. Okay, these are the practical, lot of practical things are there. So those things are not needed for you. So just keep in your mind this theory. That is enough, more than enough. Okay. We have two types of audit procedures, TOC, which means test of control, and second one is substantive audit procedures. Okay. Now, as an auditor, we perform TOC, test of control. Okay. As an auditor, we perform test of control first. Okay. Test of control. And if we rely on controls, if we rely on controls, then we can do only limited substantive procedures. What is mean by limited substantive procedures? There, we don't need to do detailed verification because some comfort we have taken from test of control already. Yeah, some comfort we have taken from cost of test of control. We are relying on control. After verification, after our test of control procedure, now we got some comfort. Yes, this company has proper internal control. Okay, this company has proper internal control. Okay, then we can rely on the control. Okay, if we rely on the control, we don't need to verify in detail manner other verifications, which means substantive procedure. So some extent we can get the comfort. Okay, then payment එකක් කරනවා නම් මේ payment එක director ගේ approval එක නැතුව යන්නේ නැහැ. Without director's approval, they can't make any payment. Okay, if we check 25 payment transactions, yes, all the payment transactions have been approved by the director. Then we have comfort. Yes, without director's permission, no any transaction, no any payments will go. That comfort we have. If we have that comfort, then we don't need to check detailed verification of expenses. We have to check, keep this point in your mind. That's why I told limited substantive audit procedures. I'm not saying entirely you should rely on the controls, okay? If you are relying on controls, then EOC plus limited substantive procedures, okay? Limited substantive procedures. So, but we don't need to do detailed verification because 50% of comfort. Yeah, I'm saying this percentage only for this understanding purpose, not like that in a practical manner. Don't misunderstand. So 50% of in if we measure if I give numbers here, then you can easily understand. That's why I'm giving numbers. So 50 or let's say 60% of comfort we have taken from the test of control. Okay, 60% of comfort we have taken from the test of control. So balance 40% only we have to do substantive audit procedure. So we don't need to verify in detailed manner just certain things like ARP, analytical review, variance analysis, and small level of detailed verification. With that, we can conclude our audit procedure. If we rely on controls, we can conclude like that because 60% of satisfaction we have derived from test of control. Okay, so balance 40% only we have to take from substantive procedures. For that, we have to perform limited substantive audit procedures. Some ARP we can do, analytical review procedures, or some some detailed verification for small number of samples. Small number of samples, detailed verification we can do and we can conclude. Okay. Now second scenario, we have done test of control, but we are not satisfied. Or in that company to perform the test of control, they didn't design any controls. Okay. At designing stage ma then controls නැත්තම් ඩිසයිනින් ස්ටේජ් එක දැන් කන්ට්‍රෝල් නැත්නම් අපිට perform කරන්න ඕනේ නැහැනේ. මොකටද perform කරන්නේ? පේපර් එකෙන් controls නැත්නම් කොහොමද ඒක තියනවද නැද්ද කියලා perform කරන්න ඕනේ. ඕනේ නැහැනේ. පේපර් එකෙන් තිබ්බොත්නේ ඒගොල්ලන් procedure manual එකක් internal control එක තියාගත්තොත්නේ perform කරන්නේ. If they have only internal control manual, then only we can check that manual with physical transactions no. Okay. So if they don't have manual, then there itself we can confirm they don't have any internal control effectiveness. Okay, then we can't rely on the control. That is first, second scenario, part B, part A. Part B, okay, they have designed properly, they have good internal control manual, they have proper financial internal control manual, but when it comes to testing, we found out of that our 25 samples, out of that 25, 20 samples are not comply with the controls. Then what will happen? We can't rely on the controls. Now we can't rely on the controls. Now that initially we took 60 percentage in our first scenario, we have taken the 60 percentage comfort now from internal control. So because of that, substantive procedures we have limited 40 percentage only we have performed the substantive procedure. Now here in this scenario 2 part A and B, we don't have we are not satisfied with the controls of the organization. Then what will happen? The 60%, not 60%, even 10%, even 10% even we cannot take from internal control result. So now entire 100% we should perform through substantive procedures. If you want to get satisfaction in the audit, we have to entire 100% we have to perform substantive audit procedures. Okay. If we rely on controls, we can do combined audit procedures, which means test of control plus limited substantive procedures. Next line, right? If auditors do not rely on control, right? As a next point. Now you can write. I hope you have understood. Just let me know you have understood or not. Just let me know you have understood or not. Just send the message. Because here this is you can't understand 100 percentage, because if you want to understand 100 percentage knowledge of this thing, you have to be a part of practical process. Okay. If any practical things are there, you can understand. But in your level, you don't need to bother about whether I should have a practical knowledge of these things, because with this uh, explanation and notes, you will be able to get through the exam. Okay. But basic thing you should understand. Only one my recommendation or suggestion, concept you have to understand. Yes, test of control means what? They are checking the controls. They are checking the controls. Okay. So if controls are okay for auditors, if they are satisfied with the controls, they will do limited substantive audit procedures. What is mean by substantive audit procedures? There are two things. Detailed verification, which means test of details. Another one is ARP, analytical review procedure, substantive analytical review procedure. If they are rely on control, okay, they can go ahead with limited substantive procedures. They don't need to verify in detailed manner. They can reduce the sample for substantive audit procedures, and with ARP, analytical review procedures, substantive analytical review process, they can conclude. If they don't rely on controls, what will happen? They can't use controls for their audit work. Entirely detailed verification must be done. Okay. So, right, if auditors do not rely on control, if auditors do not rely on control, auditors should perform the fully substantive audit procedures. Fully substantive audit procedures. Auditors should perform fully substantive audit procedure. So these detailed discussion you will learn in stage 2. Okay. දැන් මෙතනම stage 2 එකේ ඔයගොල්ලන්ගේ second semester එකෙන් තියෙන්නේ 100% audit. Okay, not internal control and business process. So එතනත් දැන් මෙතනම ඔක්කොම ඉගෙන ගත්තොත් එතන ගිහලා ඉගෙන ගන්න මොකුත් නැහැ නේ. advanced version එක එතන ඉගෙන ගන්න ඕනේ. මෙතන ඒ version ගේ topic එක මොනවද? basic thing එක මොනවද කියලා තමයි මේ level එකෙන් ඔයා fundamental එකෙන් study කරන්න ඕනේ. Second stage එකෙන් තමයි detailed version of these topics will be discussed. Okay. දැන් මෙතන මේ concept එක මොනවද? test of control නම් මොනවද? test of control එක effective නම් මොනවද? test of control effective නම් auditors මොනවද කරන්නේ? You just think about those topics. That is enough. Second stage, you will learn advanced version. Clear? Okay. So what are the examples of test of control? Inspect purchase invoices for evidences authorization by manager. Whether purchase invoices are authorized by the manager before making the payment. Okay. Before making the payment, whether we have discussed a lot of internal controls now in our business process and internal control chapter also we have discussed whether payment vouchers are approved, whether sales invoices are approved by marketing proper of appropriate person, and whether GRNs are approved by storekeeper. Okay, whether before making the payment, whether director or appropriate person approve the payments. Okay, uh, whether inventory movements are recorded properly or not, whether when they issue the inventories to one floor to another floor, whether they are using documents like MIN, material requisition note, material issue note, material return note, we have discussed now. So whether they are using, those are the internal control. If internal controls are properly operated, then we can get comfort on internal controls. Substantive procedures. Substantive procedures. Substantive procedures are procedures designed to detect material misstatement at assertion level. They consist test of details and substantive analytical procedures. Test of details, test of details, and substantive TOD. In short form, we are saying TOD. Test of details and substantive analytical review procedure. Okay, substantive analytical review procedures. Okay, what is mean by test of detail? Test of detail means in detail verification. For example, if you want to verify the sales invoices, dispatch note, sales order, entire things you have to in detail verify. You should verify in detail. Purchase, GRN, purchase order, payment, purchase invoice, detail verification you have to inspect and verify. If you want to verify the expenses, quotation sent by the supplier, whether that quotation approved by the based on the quotations only we have selected the suppliers or not, and whether supply has suppliers invoices, whether payments supply, whether invoice amount and payments are okay or not, which entire verification we have to do. That is called detail test of details. Substantive test, read the para. Substantive test of detail look at supporting evidences for individual transaction and traces them through the financial statements to ensure they are dealt with appropriately. Individual transaction wise we have to trace and we have to verify the documents. What are the examples? Inspect purchase invoices for the amount and trace into the detailed purchase listing. Purchase invoice, okay, purchase invoice, we have to match with the purchase invoice. We have purchases, we have to compare with the invoices, and GRN listing is there, no? That GRN listing should be matched with the ledger. Then let's say purchase again, GRN again, purchase again, then GRN again, purchase again, we can in the ERP we can take GRN list with the amounts. How many purchase made by the company during the year. If they maintain GRN in order, all the GRN numbers with amount we can take, and that amounts and amounts must be compared with the ledger amount. Detail verification, and we have to select the samples and we have to verify the purchase invoices. Okay, recalculate an allowance for doubtful receivable using the client formula to verify arithmetical accuracy. The bonus provision have දාලා තියෙනවා. Client has put bonus provision. So now we have to discuss with the management, and we have to get the basis for calculation, and we have to recalculate the computation to ensure the accuracy. Depreciation. Client has used the client has computed and recognized the depreciation amount. In order to ensure the accuracy, we have to recalculate. Okay, we have to reperform the bank reconciliation. The bank reconciliation client අතලා තියෙනවනේ. දැන් proper, for example, let's say මේ bank reconciliation මට කියන්න පුළුවන් test of controls එකත් එක්ක link කරලා bank reconciliation company එකෙන් weekly wise prepare කරනවා. Every week they are preparing the bank reconciliation, and that bank reconciliation is approved by finance controller every week. Proper controls are implemented in the bank reconciliation process. Then we don't need to, then we can rely on the control. Then we don't need to re-perform the bank reconciliation again because we are relying on control. Then we should check only the unprecedented unrealized checks and we can conclude. Okay, because controls are operated effectively. Then we don't need to do re-performance. No, controls are there. So we can reduce our substantive audit procedure. Re-performance of bank reconciliation is a substantive audit procedure. Okay, it's a one-off test of detail. Re-performance of bank reconciliation. If controls are properly implemented and operated effectively, then we can get conclusion. Yes, controls are operated effectively. We are relying on control. Then we don't need to re-perform the bank reconciliation. We just check the subsequent status of unpresent and real estate, then we can conclude. Second scenario, if bank reconciliations are not reviewed properly, then we can't rely on the controls. Then we have to re-perform detailed substantive audit procedure. We have to re-perform 2 3 months, and we should get that comfort. In first scenario, how we got that comfort? Through internal control efficiency. So here, in second scenario, internal controls are not there. So how finally, as an auditor, we should get the comfort. Then only we can give audit report opinion. Otherwise, we can't skip our audit procedures. Okay, we can't skip our audit procedures because of non-availability of test controls. We can't skip our audit procedures. Controls are there means we can get some uh, satisfaction or comfort from the controls. If controls are not there means we have to do fully substantive audit procedures. So here controls are not there. Bank reconciliations are not approved or reviewed by finance controller or appropriate person. Then we have to re-perform the bank reconciliation to ensure the accuracy and completeness. Okay. Examine the instruction to identify slow-moving inventory lines when attending the inventory count. Okay. If auditors attending the inventory count observation, then there's a substantive audit procedures. Detailed test of details. So these things are the substantive test of details. Not only these three, we have some more. Okay. I have given here only three. So here you should, in this topic, test of details, you should remember two things. Examples of test of detail. Okay, detail verification. Examples I have given. And definition you have to understand. Test of details means detail verification. Okay. Now we will move on to substantive anticial review procedure. So before that, I want to explain anticial review procedure. Okay, before that, I want to explain anticial review procedure. And one more point I want to include in your note. You have written this limited substantive audit procedures, TOC, that 4 points you have written. No, under that, put a star mark and write. Put a star mark and write. Auditors cannot avoid substantive audit procedures. Okay, auditors cannot avoid substantive audit procedures. Right, like that. Auditors cannot avoid substantive audit procedures, even if they believe controls, even if they are satisfied with the controls of the organization, still they have to perform limited substantive audit procedures. Okay, still they have to perform limited substantive audit procedures. Okay, that's the point. It doesn't mean you are satisfied with the controls of the organization. It doesn't mean you should not perform substantive audit procedures. At least certain level of substantive audit procedures you have to perform. That's why I told auditors cannot avoid substantive audit procedures. Okay. Now we will move on to analytical review procedure. So here, like write a small point under analytical review procedures. Put a short note analytical review procedure. Analytical review procedure. Under that, write auditor should perform analytical review procedures. Auditor should perform analytical review procedures Auditors should perform analytical review procedures at three stages. Highlight word three stages. Auditors should perform analytical review procedures at three stages. First stage, planning stage. First stage, planning stage. Where we have discussed this planning stage. First stage, planning stage. In bracket, write risk assessment procedure. In bracket, risk assessment procedure है कि यहाँ पे मैं analytical review करना वाली risk assessment procedures. First stage, planning stage. In bracket, write risk assessment procedure. Second stage, during the audit. Second stage, during the audit. During the audit. That is in bracket substantive analytical procedure. During the audit, substantive analytical procedure. In bracket, right, substantive analytical review procedure. First stage, planning stage, which is called risk assessment procedure. Second one, during the audit, auditor should perform the analytical review, that is called substantive analytical review procedure. Third one, third stage, finalization stage. After finalizing the audit, also auditor should perform the analytical review procedure. Okay. So first stage is risk assessment stage. So there are analytical review procedures we are using. Second stage, during the audit also we are using analytical review procedures. Third stage, finalization stage. So you should remember, you should keep in your mind, analytical review procedures we are using as an auditor, we are using at three stages. Okay, that's the point I want to convert you. At three stages we are using. Okay, planning stage, risk assessment stage. So now time to understand what is meant by analytical review procedures. Okay, simple. Analytical review procedures means two variables we have to compare and we have to get the variance and reason for those variances. Okay, in a normal term we can say we have to verify two or three variables and we have to two or three variables and we have to identify the variance and reason for those variances. Okay, first one, write in your short note. First one, first analytical review. In short form, you can write first analytical review, previous year figures and current year amounts. Previous year figures versus current year amounts. Previous year amounts versus current year amounts. Comparison, analytical review के नियम होता है. What is mean by analytical review? Compare two or three variables. Okay, and we should identify the result and we should analyze, we should get the reason for those variances. So analytical review करने का. So there are several types of analytical review. First one is previous year amounts versus current year amounts. Last year in bracket you can write previous year amounts and current year amounts. Previous year amounts comparison between a short form in लिया करना previous year amounts versus current year amount. Previous year amount versus current year amount. In bracket, last year revenue versus this year revenue. Last year revenue versus this year revenue. Second, analytical review, ratio analysis. Ratio analysis. You know, no ratio analysis. Ratio analysis. Example: GP ratio, net profit ratio, gross profit ratio, which means the GP ratio, gross profit ratio, net profit ratio, current asset ratio. So a lot of ratios are there. Third one, related accounts comparison. Related accounts comparison. Related accounts comparison. Related accounts comparison. What is mean by related accounts comparison? In bracket, write sales commission and sales, sales commission and sales, sales commission and sales. If sales are increased, then sales commission also should be increased. Then sales commission increase vela, sales ega adu venna bෑ. Okay, related accounts. What are the other related accounts? Bank overdraft interest and bank overdraft balances. Bank, in short form, you can write bank OD interest and bank OD balances. Sales and data outstanding balances. Sales and data outstanding balances. So likewise, related accounts comparison must be done. Fourth one, budget versus actual. Budget versus actual. Budgeted amounts versus actual amounts. Budgeted amount versus actual amounts. You should take company's budget, and if they have not achieved the company's budget, then you can ask them why you have not achieved. Sometimes මේව තියෙන්න පුළුවන් නේ. Budget එක achieve කරලා profit එක අඩුවෙන් පෙන්වන්න ඕනේ tax එකට කියලා profit එක අඩු කරලා තියෙන්න පුළුවන්. Okay, they can reduce the profit. So you should ask them, because as an auditor we should have a professional questionable mind. If we compare with the budget and actual amounts, if we find any deviations between budget and actual amount, then we should ask questions why these things, these budget amounts have not been achieved. So they should give proper reasons. Then those reasons must be evaluated. Okay. Fifth one, financial and non-financial details. Financial and non-financial details. Financial versus non-financial details. Because two variables, no, always two or three variables, we have to compare and we have to make the decision. So financial and non-financial data or information. Example, salary and number of staff. Salary versus number of staff. Financial salary amount, non-financial element is number of staff. If number of staff increased, then salary also should be increased. Okay, then salary also should be increased. If number of staff reduced, salary should be reduced. Okay, last year you had 100 employees, salary amount was 10 million, sorry, 1 million. This year number of employees was reduced to 75 million, sorry, 75, 100 to 75, but salary amount has gone up to 1.2 million. That's a contradict. That's a conflict. Last year 100 employees, 1 million. Okay. So this year 75 employees, but 1.2 million. So if we see these numbers, it should have come down, but instead of coming down, it has gone up. So this is unusual. So now you have to investigate. It can be happen. I'm not saying it's not happen. Okay, it can be happen, but the thing is we have to analyze, because unusual variances now. So that's also one variance analysis. So analytical procedures include comparable information last year and this year, anticipated results, budget versus forecasted, expectation prepared by the auditors, estimation and depreciation, industry information. The B part, those between elements of financial information that are expected to confirm predicted pattern based on the entity's experience, such as relationship of gross profit. This B part is ratio analysis. Those between financial information and relevant non-financial information. C part is salary versus number of staff, financial versus non-financial elements. Test of details rather than analytical procedures are likely to, yeah. So these are the analytical procedures ways, method I have given in short form. Okay, detailed version I have given here, short form I have given in your notebook. Just now I have given. Now, what is mean by substantive procedures? Sorry, substantive analytical procedures. So same thing, analytical procedures, but in substantive, in detailed manner, we have to verify. In planning stage, we have to identify the analytical review variances. When it comes to during the audit, we have to verify in detail what are the reasons behind these variances. Those must be justifiable. Documents should be verified to justify those reasons, and variances, reasons must be, as an auditor, we should be satisfied with the variance reasons. Okay. Test the balances. Test the balances as whole to identify any unusual relationship. Example, comparison of gross profit margin year on year might highlight then revenue is overstated if there is no known reason for increase the margin. Analytical procedures can be seen as sense check. Analytical procedures can be seen as sense check of balance or testing the reasonableness of balance. Like this, if you notice any variances in the planning stages or during the audit, that variances must be validated. Okay, that reasons must be validated with proper justification. Okay, that reason justification reason the justification must be evaluated by auditor when we are performing substantive audit procedure, okay, in detailed manner. That is called substantive analytical procedure. With that, okay, one part I have missed, importance of planning. Now you have some sort of idea about audit planning. Okay, why we should do audit plan. Beginning of session, I told once we have been appointed as an auditor, directly we can't jump to the performance of audit procedures. Why? If we jump to the audit procedures, we don't know what are the areas we have to perform. We have 100 accounts. Okay, without computing the material level, what will happen? We will check entire 100. There, immaterial accounts also there. Okay, in the 100 accounts, immaterial accounts also there. Then no point to do the audit. Our objective is material misstatement, finding material misstatement, but here we are checking immaterial accounts. Without material level computation, we are checking immaterial accounts. Whether any connection is there. Then audit subject exam FRF financial reporting notes එක පාඩම් කරනවා වගේ. Objective එක තියෙන්නේ material misstatement, but we are checking immaterial accounts. දැන් material accounts එක filter කරන්න නැතුව කොහොමද material misstatement එක හොයන්නේ? Okay, so we should have a guidelines. That guidelines is given by audit planning. Based on that, we will decide the audit procedures. That audit procedures will be performed at their plan performance stage, step 3. So, importance of audit planning. Appropriate attention to important areas. You know, after planning, you know what are the risk areas. For those risk areas, you will give more importance. Appropriate attention to important areas. Okay. Clear? Here, this highlighted words only you should remember. That's why, as a last part, I'm taking this importance of audit planning. Then you can easily understand. Risk assessment we did, we identified the risk, significant risk we identified, whether those are high or low or medium, and with overall or external level risk, what are the responses we have to decide. So those things we have analyzed and we have got result, answer. So we know now what are the important areas and how we should address those important areas. Those things we know now. So identify, second point, identify and resolve potential problems on timely basis. Then material calculation karan we have not computed material amount. So without computing the material, we are doing audit for entire process. Then what will happen? As I told earlier, we are not going to deduct material misstatement. We will deduct misstatements, but those will not helpful to our objective, achieve our objective. Okay. Properly organize and manage the audit. We know audit plan will give guidelines. As I told, guidelines. What are the areas we have to focus? How much we have to focus? Okay. Even though that 70 accounts we filtered in our example, those 70 accounts also we are not going to do same audit procedures. We will differentiate. High risk, we will do more audit procedures. Medium risk, we will reduce than high risk audit procedures. Low level, we will reduce further. So we know how to manage the audit. Selection of appropriate team members. High risk audit, we should give good team members. Low risk audit, we can manage with the less experienced people and facilitate the direction, supervision, and review of work. As I told, this planning will direct the audit work, assist in coordination of work done by auditors of components and experts. So then you can find where experts are needed for certain, let's say in audit planning, you will understand the business. No, let's say you are doing the audit for gem company, jewelry or gem company, diamond company. Whether you can value the diamonds, we can't value the diamonds. So if we understand the business of the organization, yes, this company's business is diamond. So now we know we have to value the diamond. We have to verify the accuracy of diamond valuation. So now we can't value that one because we are not expert to value diamond valuation. So there are some experts. So we need expert help. So wherever expert help is needed, those areas we can identify. So through audit planning, that's the one explained in last point. So with that, audit planning and risk assessment is over. Okay. So another half an hour is there. So we will start our next audit procedures next few. Audit procedures, 5-page tube, but I don't think I can complete today. So as I told, this week we will have a additional class. In that class, we will complete this balance part. This financial statement assessment I will complete now. With that, okay, with that we will conclude. But after that, this balance part we will continue on our extra class, and we will start to discuss the audit reporting also. That is an important part, audit opinion. So that one we will take in our extra class. So now we are moving to our third stage. Third step. Now we have finished. First stage we have completed. That's the first stage, auditor's appointment and agreeing the terms completed. Second stage, risk completed, risk assessment and audit planning and risk assessment completed. Now we have assessed the risk. Based on the assessment, we have decided, we have formulated. Clearly understand this word. We have formulated, we have decided, we have designed, okay, our audit procedure. What are the audit procedures? Test of controls, substantive audit procedures. Substantive audit procedures, test of details, substantive analytical review procedures. Where, what audit procedures we have to place. These things we have decided at our planning stage. Okay. Now, whatever we have decided, now time to implement. That implementation stage called audit procedure. Okay, audit procedures and audit evidence. I will come to later that audit evidence, what it's mean by audit procedures, audit evidences. You should understand. We have decided already those things we are going to now implement. Okay, we are going to implement. So that is coming under stage 3, step 3 audit procedure. Before moving to audit procedures and audit evidences, I want to explain this audit assessment, financial statement assessment. Okay, this financial statement assessments are most important thing in audit. Okay, most important thing in audit, like material calculation, financial statement assessment. What is mean by financial statement assessment? Okay, this assessment scale is most important thing. The most important thing when it comes to audit. Okay. So what is mean by that? I will take short notes and I will explain. Audit assessment. You know, board of directors are prepared. Board of directors prepare financial statements. Which means board of directors are responsible for the financial statement. In simple manner, we can say management or directors prepare the financial statements. Finance director responsible for the financial statement. So here, this diagram, you are familiar with this diagram in class, in physical classes also I have shown this one. So this diagram, board of directors, shareholder, auditor. Okay. So here, board of directors directors have given financial statement to shareholder. Directors have given to financial statement to shareholder. Okay. Financial statement. ඒකනේ අපි මෙතන audit කරන්නේ. This financial statement we are auditing. This financial statement we are auditing. Okay. Board directors have given financial statements to shareholders. What is the relationship between shareholders and directors? Shareholders invested their money in the business. They can't spend time to run the business. Instead of that, they have appointed board of directors. So board of directors run the business, directors run the business, and they should report to shareholders. They are accountable to shareholders. Okay. Shareholders invested 10 million. Directors run the business on behalf of the shareholders. End of the period, end of the year. Now, directors accountable to give report to the shareholders what happened to their 10 million fund. How directors utilize for the business that 10 million fund. That report called financial statements. Report එක දෙන්න එපා. මේක තමයි මෙහෙම තමයි ඔයගොල්ලන්ගේ funds එක මම utilize කරේ කියලා ඔයාගේ වෙනුවෙන් ඔයාගේ benefit වෙනුවෙන් final benefit should go to shareholders. This is how we have shareholders also will participate the business, but not like directors. Because of that only they have appointed directors. So directors, they should, in good faith, they should run the business in a good manner for shareholders, and they should give proper return to the shareholders. Okay. Now they have given, who shareholders have given 10 million fund year beginning. They have given last year beginning, they have given 10 million fund. Now, based on by using that 10 million, how directors perform the business. Last year, how they perform the business. That report should be given to shareholders. Clear? So that report called financial statement. Clear ne? ඔයාගේ සල්ලිට මොනවද උනේ කොහොමද අපි යුටිලයිස් කරේ කියලා එක දෙනවා. ඒ report එක තමයි financial statements. So Directors have given financial statement to the shareholders. Okay. Now, what is mean by financial statements? Whether finance statement is lines and headings or letters. Not only that, figures. Financial statements means figures. So, what are the financial statements? Statement of financial position, statement of comprehensive income, statement of changes in equity, statement of what is this cash flow, and statement of cash flow and notes. These are the financial statements. So these financial statement means these statements include amount. What are the accounts these statements include? This statement include account. If we take statement of financial position, property, plant, and equipment, investments, inventory, trade receivables, cash at bank, cash in hand, trade payables, other payables, borrowing. Likewise, lot of balance sheet related accounts are there. So financial statements consist accounts with amount, accounts with amount. Okay. If you take a P&L, revenue, statement of comprehensive income, revenue, expenses, tax, finance cost, likewise, certain elements are there. So lot of accounts are there. A lot of line items, lot of accounts are there in the financial statements. Clear? So if directors give financial statements to shareholders means directors are giving these account with amounts, these items with amounts. They are communicating. You have this much of PP as of this date. You have inventory, this much of inventory you have as of this 31st March. You have trade receivables, this much. You have cash in hand. Your bank account, your company's bank account has this much of cash balance. Sorry, bank balance. Your company has this much of cash at bank. You have this much of trade payables. You have you have to pay this much of amount to your creditors, to your other suppliers, and you have borrowed this much amount from your company has borrowed this much amount from bank. Okay, likewise, likewise, these informations have been given by directors to shareholders. Okay, shareholders through financial statement. Okay, so financial statements means these informations, these items with these items, these items with amount. That's called financial statements, figures. Okay, clear? Okay, with up to this point, clear? කියන කවුරුරි ක්ලියර්ද නැද්ද කියලා. Up to this point, okay, or do you need any explanation in relation to our previous discussion? Just you can inform through WhatsApp or here, no issue. Then I can move on to I can continue. Okay. So financial statement, first of all, you have to understand financial statements means these amounts, these items with amount. That's the financial statement. A understanding එකට එන්න. ඒක තමයි important. So as I told, PP this much of amount you have, inventory amount this much of have, your revenue, you have earned this much of revenue during the period, and your expenses, you have incurred, your company has incurred this much of expenses. Likewise, they are communicating some information through financial statement. Okay, who directors communicating to shareholders through financial statement report. Now, the may report එකනේ, the may financial statement එක reliability එක ගන්නනේ අපි හොයාගෙන ආවේ shareholders. Okay, keep that point separately away from this discussion. Now, These items have been included in the financial statement, and shareholders, directors communicated these items with the amount through financial statement report. With these amounts, okay, with this amount, clearly listen, this is important. With these amounts, okay, with these amounts, directors communicate with this amount, directors communicate some other information also. Okay, they are communicating some other information also. Okay, but you can't see those information in the finance statement. Okay, you can't see those. It's not visible. It's not visible. So here, if you say PP 10 million, you can see. You can see in the finance statement. But this information, I told no, these are the information they have given. This PP amount they have given to shareholder. With this information, some other information also they are providing to shareholders. Some other information. These some other informations are not visible in the financial statement. Clearly, not visible. But they are communicating. Okay, they are communicating some other information, but not visible in the financial statement. Those some other information we call hidden information because we can see those information. What are the things we can see in the financial statement? We can see only PP. Okay, PP 10 million. Okay, investment in shares 50 million. Okay, inventory 20 million. Cash at bank 20 million. Yes, these amounts and this line item only we can see visible. But these other information, with these informations they are providing, I said no, some information also they are providing to shareholders. Those other informations are not visible. Because of that, we are saying hidden information. Okay, hidden information. What are those other information? What are those hidden information? Okay, we can't see in our eyes. Okay, we can't see in our eyes. But those informations are included. That's why that's why we say hidden information. Okay. So hidden informations, what are those hidden information? I will take here from this line item. So accounts, I will take one account away. One account as an example. That is inventory. That is inventory. Okay. That is inventory. I will take inventory. With that, I will explain in detail. That is inventory. Now, inventory, let's say inventory 100 million. Inventory, sorry, let's say inventory 50 million. Inventory 50 million. Now, directors communicated to shareholders through financial statements. They have communicated you have inventory 50 million in your books. Okay, inventory 50 million you have inventory 50 million. That's a direct communication they have given to shareholders through this document, through this financial statement report. But with that, as I told, certain hidden information also they have given. Those things we can't see. Those things we can't see in the financial statement, but they have given. What are those hidden meaning? Okay, by giving this 50 million inventory value in the financial statement, they are saying, see, shareholder, you have 50 million inventory in your company account as of 31st March. Okay, as of 31st March, which means you have right on, you are the owner of this inventory. Okay, you are the owner of this inventory. Okay, you have ownership on this inventory 50 million. Okay, that communication, that information they are giving. Okay, you are the owner of this 50 million as of 31st March. Second one, this entire 50 million stock physically available. Okay, we have not taken any other stock. We have not taken unavailable stock to here. All stocks are physically available. Okay, see shareholder, you are having ownership on this inventory 50 million. You have right. You have right. Your company has owned by your company has ownership on this inventory. Your company has right on this inventory 50 million. This 50 million physically available. Okay, and whatever transaction relation to 50 million, whatever transaction relation to this inventory, we have recorded properly. We have not missed anything. Okay, we have not missed anything. Okay, that information they are giving. First one, your company has ownership. Your company has right on this inventory. That information they have given. Second one, physically these 50 million inventories are available. That information they have given. These are hidden meaning. These things are not available in the finance statements. Okay, you can't see these things. But with this inventory 50 million communication, they are giving this meaning also. You have right. Physically these balances are available. Whatever transaction in relation to this inventory, we have recorded in the books. We have not missed anything. We have not missed anything. And last one, these 50 million we have correctly valued. Okay, this 50 million we have correctly valued. That acknowledgement also they are giving. Okay, so those hidden meanings they are giving with this financial statement, which means they are who directors are the directors are providing some hidden meanings. They are giving some representations. They are giving some representation. This hidden meaning is a representation, management representation. Okay, with this account, with this amount, they are giving some with this amount and with this account, some other information also they are giving. Those some other information we say hidden information. We can't see those information in the finance statement, but by giving the amount, they are communicating this hidden information also. Okay, this hidden information also they are communicating. So, which those hidden information we call management representation. That management representation mean audit assertion. Okay, mean this management represent they call assertions. Okay, assertions. Clear? Clear? You have ownership, you have right. That is called right. You have physically these balances, existence. Physically, you have these 50 million worth of goods, existence as of 31st March, existence. All the records we have taken into the account. We have not missed anything, completeness, and this value has been correctly valued. This value has been correctly valued. So, valuation, value. Okay, valuation. It should be valuation. Okay, valuation. So, these informations also they are giving through financial statements. It's called hidden meaning. This hidden meaning is called in technical term. Correct word is management representation, assertion. Technical word is assertions. So what is our auditor's responsibility? Then now auditors have given, sorry, board of directors have given financial statement to shareholders with these hidden meanings, these assertions. Now shareholders want to check whether whatever communicated by directors, whatever communicated by directors as a hidden meanings, as a assertions, whether these assertions are correct or not. Okay. Now Now, this link is important. Carefully listen. Directors have given accounts to the shareholders. Okay, directors have given accounts to the shareholders through financial statement. These accounts they have communicated with this hidden meaning. Now shareholders want, okay, they have communicated some information, some hidden meaning, some representation they have given. Now I don't rely those representation. I need independent opinion. So now shareholders come and ask us, you should give whether these representations are correctly available or not. That's the opinion we should give. No material misstatements are not there. Whether now they are coming and ask us, they are coming and asking whether these representations are available with these material accounts or not. These accounts or not. So, as an auditor, our audit procedures should be linked to these assertions. Okay, as an auditor, our audit procedures should be linked to these assertions. That's why I always tell to our uh, audit trainees also, whenever you write whenever you write work done, whenever you perform audit procedures, those audit procedures must be linked to audit assertions. Okay, because share directors communicated these hidden meanings to shareholders. Now shareholders want to ensure whether these communicated hidden meanings, these representations are available with these amounts or not, this figure, these accounts or not. So our responsibility as an auditor, our responsibility is we should verify those accounts and we should ensure, yeah, these representations are available with these accounts. To verify that, our audit procedure should be linked to those assertions. Clear? So each and every audit process must be linked to audit assertion. So here, if we take quickly, we will go through the assertions. Representation by management. Okay, representation by management representation. For the class of, there are three types of things in the account. Class of transaction, account balances, presentation and disclosure. Don't get confused. Okay, don't get confused too much. Class of transaction means P&L, income statement related assertion. Class of transactions means income statement. For the account balances means balance sheet, statement of financial position. Okay. Presentation and disclosures means other presentation and disclosures like subsequent events, capital commitment, contingent liability, those things. Okay. So there are three types. Financial statements we can classify financial statements we can classify into three types. We can segregate into three classifications: income statement, balance sheet, and I'm not talking about financial type of what are the financial statements. Okay, these financial statements we can classify into three: account balances, class of transactions, and presentation disclosures. So account balances means balance sheet. This one is balance sheet. Class of transactions means P&L item. Okay, so for balance sheet only, inventory is a balance sheet item. So we have discussed, right? Existence, valuation, completeness. Right? Existence. What is meant by existence? The particular date, all the assets are exist. Okay. Assets, not only assets, liabilities also. Whatever items are included in the balance sheet, assumptions, these assumptions are related to those items. Existence, assets, liabilities, and equity, interest exist. That particular date exists, which means physically available. It's like this, not only physically available. Inventory, for inventory, I told physically available. Let's say bank balances, bank confirmation. Okay. Likewise, it's not only physically available if the existence. Okay. Whatever uh, whatever activity you can uh, ensure that existence of the transaction, that is related to existence. Okay, there's existence audit procedures. It's not only the physical verification. Okay, physical balance confirmation. If data confirms this confirmation, that is also exist. 31st March. So එදාට මේක තියෙනවා. 31st March මේක තියෙනවා කියලා කියන එක තමයි existence. Rights, obviously rights and obligation. Rights for assets, obligations for liabilities, ownership for rights, ownership for assets, and obligations for payables. Completeness. All assets, liabilities, and equity interest that should have been recorded have been recorded. Should have been recorded have been recorded. Okay? Whatever account should have been, whatever transaction should have been accounted in that particular account, those things are accounted. We have not missed anything. Valuation and allocation. Asset liabilities and equity interests have been included in the financial statements at appropriate amount, correctly valued, and accounted, and any resulting valuation or allocation adjustments have been appropriately recorded. Let's say debtors provision or inventory provision, inventory slow movings are there. Those things must be valued properly and calculated properly, and those things must be deducted from inventory value. And presentation. Assets, liabilities, and equity interest are appropriately aggregate or disaggregate and clearly describe and related disclosures are relevant. So these things you don't need to memorize everything. Just concept you have to understand. Okay, presentations means assets are correctly presented at present. Sorry, correctly presented, which means the narration correctly put, classification correctly classified. Those things called presentation. When it comes to P&L items, we have occurrence, completeness, accuracy, cutoff, classification, and presentation. For P&L items, what is meant by occurrence? Occurrence means, let's say revenue. Occurrence means revenue, whatever we have recorded, in your terms you can use, okay? When you explain these things, you can use your terms, but without changing the concept, okay? Here you can use your terms. It doesn't matter, no issues, but concept should not be changed. What is the occurrence? Whatever transactions we have recorded in the books, those have been actually taken place, actually occurred. ඇත්තටම මේක වෙලා තියෙනවා. වෙලා තියෙන transaction විතරයි අපි record කරලා තියෙන්නේ. That means occurrence. Completeness, other way around. Okay? So now occurrence කියන්නේ whatever transactions recorded in the books, those transactions have been actually taken place, occurred. Completeness, whatever transaction happened, every transactions have been taken to the account. Same as our account balance of completeness. Balance sheet items completeness of බැලුවානේ. ඒ වගේම ඒ completeness එක. Whatever transactions happen during the period, all the transactions have been taken into the account. Accuracy is related to like a valuation. Amounts and other data related to the recorded transaction and events have been recorded appropriately. Accuracy means that particular transaction has been recorded at correct amount. Particular transaction has been recorded at correct amount, not over or understated. Cutoff. This cutoff part I will discuss later. Cutoff. Classification. Classification means admin expenses should be classified under admin, distribution expense should be classified under distribution, finance cost should be classified under finance. ඒක මාරු වෙලා දාන්න බෑ. Presentation, same as balance sheet. Transactions and events are appropriately aggregated or disaggregated and clearly described. Presentation means correctly we have to present. Okay. And presentation and disclosures. What is mean by presentation? We know, okay, we know balance sheet items, we know disclosures. What else? Presentation and disclosures means contingent liabilities and subsequent events, capital commitments. Those things also should have these assertions: occurrence, completeness, classification, and accuracy. Okay, with that, we will conclude today's session. I will give QR. I don't know also it will work or not. See whether now it's visible, this QR. Are you paying or then?
Yes, sir. Yes, sir.
Okay,
Visible.
then you can mark your attendance. Okay, sir. Any problem? Can whenever, sir.
Not yet, sir.
Can anytime can. Okay, with this we can conclude. So you can log out after scanning the QR. And one more, and coordinator, one more information. You just discuss with the other students and let me know the time this weekday for 3 hours lecture. Okay, that would be that's the last lecturing, last lecture. So there I have to cover this audit procedures balance part and audit report. So I don't think questions we can cover, but questions I will upload the answers. So internal control and this audit questions and answers I will upload. And you can refer past papers as a model paper. You can refer 17A weekday, 17A weekend, and 18A weekday. 18A weekday also you can refer. So these past papers you can refer as a model paper. And you can practice the questions. These are straightforward questions. Practice the questions. What I'm going to upload in the LMS. Okay.
Excuse me, sir.
Yes.
Sir, at this time I can't mark my attendance. It's asking a password, sir.
Others, no one has faced this type of problem, no? Okay, just send me your number. Others, I think others, they are marking. Some of them have
Okay, sir. I will send
sign
my
off all.
number.
Okay.
Sir, I can't mark also. It asking for password.
Mm, okay, fine, fine. Then immediately send your numbers. I will mark it. But send your numbers in the group, but put second session. Otherwise, it will get confused. Whoever send second session, just send in bracket, mention second session. Hola, okay, no? Then I will stop the sharing. All okay, no?
Okay, sir.
Okay, thank you.
Thank you, sir.